Good afternoon and good morning to those of you that have joined us from overseas. It's great to see you today. As always, we'll just wait a few seconds for everyone to settle in, grab a coffee. We've got an important topic today, mastering global payroll payments, but we'll go on to that shortly. Feels very alien to me, just trying to keep quiet, which I'm never successful with. Okay, so thank you for joining us today. I'm happy to say we've got Currencies Direct, our partners, and discussing mastering global payroll payments in 2026, reducing costs, preventing failures, and strengthening compliance through smarter payroll workflows, which is a really important part. I talk about this a lot at the moment, and I know, Craig, we've spoken about it before, about how important it is. Once you've got the payroll delivered, sorted, and you think, okay, I've delivered the payroll, and you've got to make sure you've got the payments and the compliance side. And a lot of our members are run into more and more issues on the physical payment side. So these webinars are really important to run. So I'd like to know from the audience today where you're dialing in from. I know in Europe and the US, we've got some interesting weather. So if you want to share any stories, or if you're snowed in by 20 foot of snow, let us know. Or if you're in the sun and make us jealous. But yeah, put in chat where you're from. And if you want to go on to Dublin, hello. There we go, we've got Ireland already. Craig, do you want to move on to the next slide for me? There you go. So the webinar is going to be roughly 45 minutes. It's going to be available on the GPA website. So if you do miss any part of it, or you want to share it with your colleagues, we will send you the link. If you do also have any questions, please feel free to add them in the chat. We've also got some polls, and if you attend our webinars, I do like people to get involved in the polls. So yeah, it would be great if you do. I see we have somebody from London, grey afternoon here. Unfortunately, I'm there as well. But we have somebody from Tel Aviv, and I'm sure you've got fantastic sun. Maybe we don't want to hear about that. Oh, grey and cold. I think everywhere's grey and cold. But anyway, we're not here to talk about the weather. I'm sorry I started that subject. We're here to talk about payments. So I'm going to pass you over to Steph. Thank you, everyone.
Thank you, Melanie, and good morning, good afternoon, and good evening for you joining us for this unique webinars. I'm very glad to be with you today with Craig to get the opportunity to go through this next 45 minutes presentation. I'm making sure that by the end of this presentation, we'll get enough time for a Q&A session, and making sure we can go through any of them to answer as much as possible to these questions. To start with, maybe who I am. So Stefan Barnzil, I'm looking after the B2B business for Currency Direct. So what does it mean? I'm in charge of making sure that for our business customers, we're in position to deliver the right capabilities from platform and services to support anything related to international payments. I spent the last 25 years in the tech industry. And from my last experiences, I've got the opportunity to look after international customers, and most likely with customers into the maritime sector, where international payments on a monthly basis for their crew members was a real challenge, and I was delivering to them software and capabilities to manage payroll. Craig?
Hey, good afternoon, good morning, good evening, everyone. My name is Craig Bryce. And like Steph, I've been in the payments industry for about 20 years. My role at Currencies Direct is head of pre-sales and implementation. So it's my role to work with our customers, understand their requirements and pain points, and explain how our services can help bring efficiencies and cost reductions, especially to our payroll customers. So I look forward to talking with you today and your questions at the end of the presentation. Thank you.
Thank you, Craig. Let's go in a short period of time to introduce briefly who is Currency Direct. Currency Direct, so we are We are a 30 years old company, getting as a consequence quite a huge level of experiences when we are talking about ethics management globally. We've got offices almost in any continent in the world, where we can get some offices, teams supporting local customers for any of their needs. The way we are currently operating is by making sure that in our level of services on the software we're offering, we are reducing complexity in international payments. And what we mean by complexity will be typically highlighted during this call related to payroll, on the complexity into international payroll management on a monthly basis. Trying to be a bit, I would say, highlighting what we are going to deliver to you during this session. Maybe three main blocks. The first one will be anything about processes. So typically highlighting why global payment needs to a new operating process by 2026. And we are going to go into this level of details thanks to the workflow that you have to go through and how they should be evolving. And then we are going to stay in this process world and be a bit more focused on this end-to-end cost that we have behind global payments. So it's going to be quite important for us to highlight how to make sure that it's not going to be an expensive process to execute international payroll processes. Then we are going to go maybe the most important part of the session, which is compliance. And compliance is absolutely compelling when you are making international payments. And we are going to highlight what kind of hidden compliance layers that you as professional, you have to go through to make sure you stay into compliance. And we are going to give and share some tips on the highlight how to make it in the best possible way. And also making sure how we can reduce as much as possible failures in these compliance processes. And lastly, it's going to be, of course, about technology. We are all looking for automation, saving time, on making sure that we can automate as much as possible payroll, international payroll processes, just because it's monthly process. So it's going to happen at least 12 times a year. So we need to make sure that automation is going to be well organized and executed as a consequence. So why we are considering that this global payroll processes environment is evolving by 2026. Just because we are arriving at the level of maturity that we have into our payroll, into our organization, even more international employees located everywhere in the world that we have to manage than before. Since COVID, we have an amplification of this kind of behavior and this kind of setup, which is an amazing opportunity to get the best talent in our organization to look after and to execute payroll. So what does it mean? Payroll approval processes are no longer guaranteed, and they are no more guaranteeing successful payments because of this complexity of new joiner, new location changes, new evolution into the ethics volatility that we have to look after. Environment behind the political or geopolitical stuff is just creating a big level of change and changes on a weekly basis. So being in position to forecast accordingly payment is always a massive challenge. The second element is the compliance related, which is one of the outcomes that is needs to be managed, related to the data check, KYC, on anything about KYB, making sure that we can make sure anything about new currencies or evolution of currencies is going to change. Could be a good question for the poll, but it's not going to happen. But who knows that we have a new country coming into the Eurozone with Euro payments in the 1st of Jan. So it's typically one of the compliance that needs to be properly handled to maximize the performance of any organization. And lastly, technology. Why technology? Because payroll systems are super well structured and defined to make sure that You can run a payroll, making sure that you've got all the numbers properly set up, understanding what should be the social taxes that needs to be paid, how much should be paid to an employee. But a payroll system is not telling you, what will be the conversion that you have to manage from one currency to another, on what is the processes you have to go through to make sure that the end payment is going to be done accurately. When you have this long process in regards of payments to be managed. Cutoff is on the working day 12. Payment is the last day of the month that is happening. So this volatility in between the working day 12 when cutoff is done for payments and the last day when the payment is really executed, in between you have a lot of volatility on a lot of stuff that is to be done. Let's go with a poll. Typically, a good opportunity to receive your feedback, understanding at what point do payment issues most commonly surface for your team. So, what are the main challenges you are facing?
So can you see the poll on the screen?
Yes, we can.
Okay, so we'll just wait for people to answer. Thank you, everyone that's answered so far. What do you both think is going to be the top answer on this one? Steph, do you want to?
I will go with after approval. You have a big gaps between approval payment and the execution of the payment.
Craig, have you got any thoughts?
Yeah, I agree with that. I think also we might get quite a large number voting for after payday, where for some reason payments are returned due to data issues. But I think after approval is probably most likely.
Okay, there's some of you, I'm near my magic number. So there's a couple of you that haven't answered. So if you don't mind, if you could answer, that'd be fabulous. And I will end the poll and then everyone can see the results. Just going to ask one more person out there if they want to answer it. No, I'm begging, aren't I? I'm not going to beg. Okay. Okay, I'm going to, oh, thank you, whoever that was. Thank you very much. I'm going to end the poll now. Okay, so here are the results. So as you can see, before payroll approval, 10%, after approval, 33%, after payday, 41%, and we don't consistently know until something fails. So there's quite close results there, wasn't it, in the middle too?
Yeah. I think that makes absolute sense. I think after approval, definitely that's where issues happen. But as I say, I think it is fixing the errors that come in after they've been sent out, and you might get inconsistent payments coming back because fees have been taken off them, so it's hard to reconcile the payout to the what you receive in the return. So that makes sense.
Next slide, maybe, Craig. Thank you. So just to finish up with this process-centric introduction about the level of changes we have, and definitely highlighted in the I would say into the poll. Just to maybe summarize before moving to the next level of explanation related to compliance, where my partner in crime, Craig, is going to go into today. So this FX volatility that is created, which is creating this misalignment, is really something as a main process and main challenges to bear in mind. Something that we didn't really highlighted it today, but I'm sure you receive some of the feedback, which is panel employees, I would say, outcome with the challenges of I would say engagement, retention of talents when you have some misleading information between a payslip and the payments that is done. Legacy applications that are, I would say, struggling to keep pace with payment change. These old or traditional payroll tools that are not equipped with international payment capabilities, and payment risk, which are now beyond payroll approval. You have so many different people that need to provide validation that could be also an opportunity for some hacking via any email address or outbox that anyone will be using. To move into a bit more details about the compliance part, Craig, I will hand over to you to go in this level of details.
Thanks, Steph. So before we get into the compliance piece, I want to basically touch on some of the costs that are not part of the payroll flow per se, but can influence the costs both in money and in time when things go wrong. So the way I split this up is on the FX itself, on the funding, on the actual transfer of the payment, and then the management of when things go wrong. So from an FX point of view, as we all know, FX rates can be volatile. If, for example, Mr. Trump invades Denmark, that could be, sorry, Greenland, hopefully it won't invade Denmark, it invades Greenland, that could cause changes to the FX rate quite dramatically. But also, so can market changes as well, such as interest rates being lowered or raised in the UK or in America. That changes the FX rate as well. And we do see people having to pay more money because of that swing in the FX rate. For example, if you are having $1 million US dollar payroll to fund, and it moves from the rate moves from 1.25 to 1.20, which is a change of only 0.05. That would cost about £30,000 you would have to fund extra. So you do have to manage that FX exposure. And there are ways to do that, such as using FX risk management tools like hedging to lock in that exchange rate. We also see banks, obviously, it's sometimes you don't have full transparency on what they're going to cost you in terms of FX rates, the spread on them, because it'll change from from US dollar, will be different from euro, will be different from Sing dollars, will be different from Aussie dollars, etc. And sometimes you don't know that until you actually make or convert, your currency into that payout currency. And lastly, of course, there's the whole concept of currency breakage, which is where if the FX rate swings and say you've overfunded because the FX rate has changed, then you would have an amount in your payroll funding account that would just be sitting there and have to be repatriated. And similarly, the other way, where, as I mentioned earlier, you may have to charge or spend more to fund that payroll. On the other side, you have the Treasury side of things where they have to fund it. And Treasury processes tend to be, at least for our customers that we've talked to, they tend to be completely separate from the payroll process. So they'll have their own way of approving and making approvals. They'll want to have view into the payroll to make sure it's correct. Before their payment's actually made. And lastly, of course, that we have a number of customers who do this, who will have a bank account for every single currency that they pay out. And of course, that brings difficulty and complexity into controlling into managing that treasury and the funding of the payroll. Moving on, if you look at the other one, so when we send that transaction, banks, being very conservative, tend to use the default method of sending payments. So international payments quite often will default into a SWIFT payment, where you'll be charged a transaction fee as well as a conversion rate. Whereas if you were able to use their own banking network or their own network to use to send out via local rails, such as SEPA, NBP in Australia, then that would cut down the transaction cost and cut down the cost of making that payment. If it does go through SWIFT, and many payments have to, then there's also the risk of it going through multiple intermediaries. So going through a number of different banks, each of which might deduct a fee for processing it. So again, you may find that your employee doesn't receive his full salary because of just the complexity of making that payment through the SWIFT network. And again, the banks themselves have their own fee structures, which you probably know up front, but then if they return payments, then that cost of return may be an unknown because, again, you may have intermediary fees being applied, you may have return fees applied by your own bank, and then, as we mentioned in the poll, reconciling that can be difficult. And the last hidden cost I want to mention is, of course, what happens when it goes wrong, as was mentioned in the poll. Errors occur. It may be a validation error, it may be the fact that the payroll has been uploaded but it isn't actually validated until execution time, until the payment is created and made, leading to where you have to go into those payments, maybe even recreate a payment file, fix the data, and resubmit. And of course, all of this could be, if it's manual, and a lot of it is for some of our customers, then that data correction, and because of the urgency, it can lead to more manual errors, which again causes issues for your employees and obviously more cost as well. So I'm going to pause for a second and we'll go into another poll. What would be good to know is what causes the most friction in your own payment process today?
Yes, we've got fixed timing volatility, routing and intermediary deductions, human error, late stage fixes, rework. So Craig, I'll ask you first. What do you reckon is going to be this one?
I think late stage fixes might be the biggest one, although I think human error might creep in as well.
Yeah, Steph?
We'll go with late stage fixes, rework.
Yeah, okay. So we'll just give it a few more seconds. I will say everyone's pretty hot on answering the polls today. Thank you very much. We've actually done very well. Okay, so I'll leave it a few more seconds. So I can see the results. So I think they're pretty close again. Right. Okay, so a couple more seconds and I'm going to end the poll. Okay, so we have FX timing 16%, routing and intermediary deduction 16%, human error 32%, late stage fixes stroke rework 36%.
Yeah, I think that's what I would expect, to be honest.
Yep.
So we've talked about the costs that we know about, because they're part of the funding, they're part of the FX, as you mentioned, is in the poll as well. Let's talk about the lurking dangers of compliance. Because behind all these payments that we're making, there is the compliance, the regulatory requirements, and not just compliance in terms of regulatory, to be fair, or AML, but also complying to the data formats, the payment formats. A lot of it, when we talk to our customers, a lot of the late stage payment failures are due to the payments not being bank ready. Now, what would you mean about bank ready? It's that they're not validated up front. There is a good chance that the payment may fail. And if you look at the regulatory changes that have come in over the last year and a bit, we look at the changes in Europe with the verification of PE, in UK for confirmation of PE. If they are not checked up front when you create the payment, then you may get a message back that you have to then manage to say that the name of the account that you're trying to pay does not match the account name you've got, which of course brings in cost in terms of time and risk in terms of actually not making that payment as well. Of course, as you increase and start moving into other countries, then increases as your company grows and you move into new geographies, you may find that you then have to, as a payroll group, have to think about, compliance really shouldn't be your issue. That should be you should be managing the payroll, not the compliance requirements. But you may have to capture more data, such as tax codes or purpose codes. You may have to think about, do I need the full employee's name and address, such as you do for US and Canada and China, etc. So you may have older systems, or you may have rules that you then have to think about changing to make sure that these payments will be successful when they're actually executed. And as I mentioned, a lot of these changes aren't down to AML. They don't occur because the data has been captured by a sanction check or it's on a list somewhere. It's because you're trying to manage compliance rules and requirements that aren't always that well described, or if they are, they're very complex. And it's almost as if you have to work more closely with the compliance team to actually implement these changes. And it may be that you believe you're complying to the regulation, but in actual fact, something's gone wrong, it's not quite right, and then the payment's rejected again. There's similar things like, as Steph mentioned, there are changes happening in terms of the Eurozone as well, with Bulgaria becoming part of the Eurozone and therefore using the euro rather than, I think it was LEC. So those changes as well, you have to be managed as geographies change and we change as well. And lastly, from a compliance point of view, doing manual changes can introduce risk as well. If you are going to submit the same payment 2 or 3 times, 4 times, then the bank may start rejecting it because they're not sure there's a genuine payment. There might hit their fraud checkers, etc. So the more manual work you do, the more risk that actually you'll be breaking the compliance rules. For example, again, going back to VOP, maybe getting the account name wrong, maybe making a mistake in the surname of a person and it gets caught by a sanction check. So manual changes can hit these compliance rules as well. So we'll just move on to some case studies of different types of customers that we work with and issues that they've had. So the first one is a small or medium enterprise. And I'll pass on to Steph to talk about the challenges that they were having.
Yeah, thank you, Craig. Yes, the objective here is really to come back to the real life and how we solve with some customers' issues in between before they were using our capabilities and services, and what were the solution and result they were in position to share with us as a return of experience or return of investment in these cases. So to start with SMEs or mid-market companies, and I'm sure we've got a lot of attendees here that are coming from this profile, and then after we are going to be focused on the global payment providers, like global payroll aggregator, on the good example of processes and changes that we have to handle. So to start with SMEs, so the different challenges that we can list out from customers we work with are manual approval that are quite slow because of this complexity of payments. Error that are consistently, I would say, came out from the processes that are going to be error in most of the time process compliance on amounts, typically because of the FX volatility in between the cut date and the payment date. The lack of visibility or the low visibility of the payment status, when is it going to be done, how is it going to be operated, what will be the time it's going to request, and compliance in general, meaning that to come back to the example that Craig highlighted, to send over a payment to an employee that is located into a geography that I'm not really knowing, what is the level of information that I need to capture, that I need to submit to make sure that I'm going to be compliant to execute the payment. Let's go maybe into the details about the solution and the result, Craig.
Sure, thanks, Steph. So with this customer, as Steph mentioned, their issue, there was a lot of manual work behind it. There was a lot of time spent on approval and getting approval for funding. So what they did is they standardized and centralized their approval workflow, but also the payment workflow in a single platform. And in doing that, they were able to use the validation that platform offered to ensure that their payments were bank ready and ready to send and ready to be executed. It also gave them the ability to track those payments. So if something did go wrong, if there was an error, they could look in one place to see what was the payment returned, why was it returned, what do we have to do to fix it. And at the same time, it removed the need for them to worry about regulation because it was handled centrally in the system rather than them having to worry about, do I have to care about VOP or COP or is Bulgaria moving to Euro, etc. That was all part of the process. So it enabled them to, one, have their payroll staff be the experts they are in doing what they do and not trying to do more. They had clear understanding of payment statuses, so they knew if they had to fix something, they could react quicker in order to make sure that the employee get paid. And their approval flow was much faster. So they're able to get payments approved quicker, they're able to scale, and if they moved into a new geography, it'd be a far less difficulty for them than if they had stayed with their manual process, which just wouldn't scale. So moving on to the aggregator, Steph.
Thank you, Craig. So moving to the aggregator, so global payroll aggregator, I'm sure we've got a lot of profile here. So challenges are a bit different because it looks like that there is already, I would say, some experiences into global payments, at least. So the challenge is much more on the nature of the customer that needs to be managed. So with, I would say, fragmented customers and workflow to engage. So what does it mean as a global payroll aggregator? You know how to make it happen, but you need to make sure that your customer is going to be fully onboarded to make sure you're going to execute the payment for them. So it's you know, the level of working processes, engagement, education that could be quite a challenge. Treasury complexity is going to be typically what is going to trigger this kind of conversation. So, you know, what is the level of amounts you are going to request for doing the payments? Why it's going to be the case? What is the level of risk you are going to take behind the FX volatility to make sure you are going to get enough into the wallet to make the payments done by the end of the month? It's really, you know, this creating this uncertainty on the, I would say, recurring conversation to make sure that things are going to be solved into the right timing. On end of the day, still this multi-country compliance that is going to be hard and tough to maintain due to the regular changes local regulator will do that you are not going to be aware as a consequence. So this is the four main challenges that a customer as a global payroll aggregator share with us before starting using our processes, product, and services. Craig, maybe you want to highlight the solution on the results?
Sure, absolutely. Thanks, Steph. So very similar actually with an SME in that, except with far greater complexity. So the aggregator themselves, again, as Steph mentioned, it fragmented workflows. They had to go to different applications to do payroll for different customers, depending on where they were in the world. So again, it was a matter of simplification, centralization, allowing them to have one platform to manage all the underlying customers in one place. From a treasury point of view, we helped their customers introduce some, well, first of all, they also were managing a number of currency accounts. So each customer would have a number of currency accounts because they were paying out and they had to fund in the payout currency, which of course wasn't convenient for the underlying customer, and it was creating complexity in treasury great complexity in treasury for the aggregator. So they moved away from having multiple accounts in different currencies for each customer to having a single funding currency account for the underlying customer, which simplified it for the underlying customer because they could then fund in base currency and pay out in many. They also, because they were able to do that, they were able to consider their customers having a hedging or an FX risk management so that they could lock in the exchange rate rather than being exposed to any volatility in any of the FX rates, which enabled them to control their costs far greater, simplified their treasury management hugely. And at the same time, one of the other things they did, because they're using a centralized platform, they can rely on its capability to manage compliance. So as they bring on a new customer in a different geography, they didn't have to worry about starting to study the regulatory requirements, the payment requirements, payment data requirements. That would be done for them, allowing them to quickly scale and bring on new customers and new revenue. So those are the two examples of our client stories, from a small SME, smallish SME, to quite a large aggregator. And I think the way we're going, what we're trying to talk about today and say to you is that FX traditionally has been an afterthought, or it's been something that's done at the side of payroll. What I think is, and what Steph and I are agree on, is that it should be part of the payroll workflow. Think about how you're going to manage and control that FX risk. Possibly think about bringing in hedging to control that FX, to make sure you don't have to pay or find extra money to fund your payroll and then make sure it's linked to your payroll calendars. So things like hedging can be done for a month, they can be done for 2 months, they can be done for a year. So you consider how you're going to handle that FX risk. I'd always suggest that you fund payroll in a single currency rather than trying to manage many accounts from a treasury point of view. It's complex, but most of all, you also will be charged for all these different accounts as well. The ideal way is, of course, to move into a fully automated process. So rather than having manual processes, your payroll application would link seamlessly to your payroll payment application or services using APIs, which means you cut down the risk of any manual errors happening. You cut down any chance that the data will be changed or you'll miss data. And you can then get things like you have one place, the payroll application, where you can monitor the payments and deal with the payments rather than having to go to many different applications. And as I mentioned, plan the FX execution in advance. I would think about using a hedging solution to control that FX risk and make sure that you guarantee that rate they're going to use for the payroll rather than having to worry about an FX rate that you've planned is X at the start of the month, but is then now going to Y at the end of the month. So thank you for your attention. I'll pass back to Steph for any last words.
Thank you, Greg, and thank you everyone for listening us. I appreciate that it has been quite a deep presentation with quite a lot of different topics, subject matters, and return of experience that we were sharing in a super short period of time. Maybe it's the right opportunity to go to some question, Melanie?
Yes, okay. So how can we reduce FX exposure if payroll approval happens days before payment execution?
So yeah, that's the way to do that is to use some sort of hedging strategy. If payroll approvals happens in general with payroll, you'll know roughly what you're going to pay out per month anyway, because it's a regular payment, it's a regular run. It might change slightly. But what you can do is you could lock in that payroll at an advantageous time at the start of the month. And once payroll approval occurs, funding approval occurs, you could then execute the payments at that FX rate. So you guarantee that you know how much, when you ask for the funding, how much is actually going to be required, rather than say to Treasury, I need X on Monday, but by the time they approve it on Wednesday, it's actually gone, it's changed, and you actually need a different amount to fund.
Okay, and what does less payday firefighting look like day to day for payroll teams?
So with traditional with our customers who before they move to a more centralized payroll processing or payroll payment processing, is a lot of that is done by not proactively. So they don't know a payment necessarily has failed until somebody from the wire room gets in touch and says, we've had a payment return, or Treasury, we have a payment return. This is a reference. Can you then examine it and fix that payment? If it's done more proactively, then you get that status. You know why it's failed. For example, the account's closed or it's an incorrect account number. Then you can contact the employee quicker. So rather than taking 2 or 3 days to fix a payment, you may be able to do it the same day as soon as you know that payment has failed. On the other side of things, if you upload the payments and the system itself will validate the payments before it's sent out to ensure that, for example, the IBANs are the correct format, the check digits correct, then before you execute that payment, you've already validated that it can be made. And the only reason it would fail would be on something that you have no control of, such as the account being closed or blocked.
And if I can elaborate a bit more here, Melanie, I do believe that it's as a consequence not only related to technology, so how much you can embed a solution to manage payment, but also the right level of support, make sure you can design the hedging strategy you are going to have, and also making sure you got the right point of contact that is going to support you on this kind of specific compliance process you have to go through. Because I do believe that some of the customers on point of contact we're currently dealing with, the major challenges they are facing is a lack of support, a lack of knowledge, a lack of having the right contact to deal with, to optimize their, or to reduce, to answer the question, their day-to-day firefighting challenges they have when related to a global international payment. So technology, processes, and support looks to me definitely, I would say, the foundation to reduce this payday firefighting.
So this is quite a good question, actually. How long, I'm actually quite interested in the answer for this one. How long can I lock the rates?
Yeah, well, it depends on who you hedge with, of course. But I know that in Currency Direct, we can lock rates from up to 2 years.
Oh.
It comes down to the bank's risk appetite, but we have customers who have locked in a rate for up to 2 years. Whether or not you'd want to do that at payroll, I'm not sure about, because that's the regular payments, but you could do up to 2 years.
Okay. How can payroll teams gain clearer visibility into, sorry, let me start again. How can payroll teams gain clearer visibility into FX costs at employee, country, and pay run level?
So the FX itself would be fixed. It depends. I mean, most payrolls, when they're executed, they'll be executed at the spot rate. So most of the times, before you actually do your conversion, you will get the rate at that time. And with most, like Currency Direct, you get the mid-market rate, so it's better than banks would give you anyway. So that's when you'd get the rate at that time. The only way to lock to, again, as we mentioned earlier, to guarantee a rate, we could use a hedging strategy that locks it in at a certain point. It's not really done, I mean, it's done at the payment level rather than a particular employee or payment, geography level. It is a, if you want, it's a market that sets the FX rate. And that's not really at a geographic level, that's judged down at the market level. So it's done at a payment level rather than a conversion level, an FX rate trade level.
Okay, and we've got one last...
If I may, I think the complexity of the underlying question here is also transparency behind the cost when you're making an international payment. Because I do believe that behind this cost, you have 3 types of costs. One is definitely the FX cost, you're in between the different value from different currencies. But you also have some other costs that you need to consider at some point. That could be, what is the cost of my platform that is currently helping me delivering these international payments, and what will be the cost of the services that I will have to pay to get this hedging strategy or any recommendation on how to handle the compliance changes I have to go through. It's really something that needs to be, I would say, properly computed on review to make sure that there is no hidden cost, because part of the element that we did discuss in the presentation was hidden cost related to a customer process. But depending on the technology you are using, you also have some other hidden costs that you have to anticipate to make it happen. And I do believe that the most valid way to make it happen is to make sure that the cost is visible only into the FX translation from one currency to another. That is going to be, as a consequence, much more predictable and much more easy to understand as a trader.
And just to add, I did forget to mention, a lot of the banks will also charge a transaction cost as well. So that, yes, as Steph says, there are many different costs to consider.
Okay, the last question. If we're paying across many countries, how do we reduce the number of exceptions without adding manual checks?
Well, that comes down to the validation. So for the customers we mentioned earlier, one of the benefits they got was the pre-validation before sending. So you're absolutely right. Sending payments across different geographies and different countries, there will be different data rules in each geography. So, for example, India requires a purpose code. Canada requires name and address of the beneficiary. etc. You've got IBANs of different formats in different European countries as well as in UAE, etc. as well. So that pre-validation becomes more and more important to cut down the exceptions that you have when you are uploading your file before execution. Because if you wait to execution and they're sent to the beneficiary bank, then of course you will get those exceptions. But if you do the validations up front, you'll be able to capture those errors quicker and be able to fix them before the payments are actually executed.
Okay, well, I think that was the last question. So thank you both so much. Really informative webinar. I think there's a lot to think about, isn't there, for payroll specialists? And I think it's only getting harder, isn't it, rather than easier? So if
100%.
Yeah, so if anybody wants to get in touch, can they do that via, are you happy for them to contact you via LinkedIn?
Yeah, sure.
Brilliant.
Absolutely.
And for those of you that are in Dublin, Steph is presenting at our symposium in Dublin on Thursday next week. So if you want to meet Steph in real life, you've got the opportunity to on Thursday. It's a free symposium and it's in partnership with Currencies Direct. So just head over to the website under events and you can register. But thank you both, really enjoyed it. And I think just in the chat, we've just put Steph's LinkedIn profile. But if you have any questions, you can always reach out to myself, but we will send everything out to you. So thank you all. And I look forward to seeing you next week, Steph.